Welcome to today's webinar, New COSO Framework, Imperative Internal Control Reporting Changes. My name is Sartaj and I'll be your moderator this morning. In front of you, you will see a webinar pane. Please note that the orange arrow will allow you to minimize or maximize the pane. If it is minimized, simply click on the orange arrow to bring it back. Feel free to submit any questions that you have for our presenters throughout the duration of the webinar. Our presenters will handle questions at the end of the webinar as time permits. If you're using your telephone to listen in on our webinar, please make sure you select Use Telephone. If you're listening through your computer speakers, please select Use Mic. If you use mic and speakers. If you have the incorrect setting selected, it will produce an echo sound. To qualify for California CE credits, use a personal computer and log in with your own information and unique URL. Be logged in into our online software for at least 50 consecutive minutes within the scheduled time frame of the webinar. Actively respond to at least 75% of the polling questions and complete the evaluation survey at the end of the webinar. With that, I would like to introduce our presenters for today's webinar. First, we have Dave Osborne. Dave has over 10 years of experience in Sarbanes-Oxley compliance with an additional 10 years in process improvement, financial systems, financial planning, and analysis. Dave's background provides him with a unique ability to understand in depth the needs of corporate management, internal audit, and an external audit. Next, we have Dave Davis. Dave has over 35 years of experience, including SEC and investor reporting, debt financing and fundraising, and mergers and acquisitions. Dave also has a prior experience being a CFO and COO. Last, we have Jeremy Suharski. Jeremy leads the Armanino governance, risk, and compliance practice. He graduated from California State Polytechnical University, San Luis Obispo in 2002 and brings over 13 years of experience building and managing teams focused on various internal control-related projects, including internal audit, Sarbanes-Oxley readiness and compliance, process optimization, and business continuity. During today's webinar, participants will review the background of internal control frameworks and why they are necessary in corporate environments, discuss how changes in the GRC landscape has promoted changes to leading frameworks, gain an understanding of the changes to COSO and how they will impact your organization, identify practical steps for the adoption of new COSO Internal Controls Framework. The presentation overview. First, we'll do okay, and with that, I'm going to turn that over to Jeremy.
Excellent. Thanks, Sartaj. I appreciate the introduction. And good morning, everybody. Thank you for taking some time out of your day to spend some time with us to learn more about the changes to the COSO Internal Controls Framework. And before we go through the presentation overview, I just need to take a moment to point out, you saw my background. I'm a Cal Poly alum, so I have to say go Mustangs because we made it into the tournament for the first time in school history, and we will beat Wichita State tonight. So, okay, back to the real business. Presentation overview, we're going to take you through the background of COSO and give you a little bit of history to what the intent of the framework was and really how it's evolved in terms of its use over the last handful of years and why that really was a key driver for change to the framework. We'll step you through what the revised framework is, what has changed, what hasn't, and really what is the impact to your organization and what do you need to be ready for. And the last but not least, really the key piece that we're hoping you walk away with is what is that implementation roadmap? What do you need to do in your environment to make sure that you are ready to have these changes in place and operating effectively in the appropriate amount of time? And with that, let's start with a first polling question.
So our first polling question for you today is, COSO was first introduced in which year? A, 1999, B, 1975, C, 1992, D, 2002, or E, not sure. We'll give everyone just a few moments to enter in your selections. Just a couple more seconds. All right, and with that.
All right, let's take a look at the results here. And it's interesting as we look at these results. The correct answer was C, 1992. Honestly does not surprise me, though, that quite a few felt that that D, 2002, was the answer. 2002, we purposely put that in there because that's when Sarbanes-Oxley was passed into law. It became effective for all companies in 2004. So very not surprising that that was the case. So let's go ahead and dive into a little more of the background. With that, we'll hand it over to Dave Osborne.
Thank you. The first COSO Internal Control Framework was published over 20 years ago, and it ultimately ended up being in 2 volumes and about 360 pages. It basically provides you a standard internal control model against which to evaluate your internal controls. It was and is a good and widely accepted framework, but it's being superseded by the new COSO framework. COSO stands for the Committee of Sponsoring Organizations of the Treadway Commission. It was formed by a group of well-known accounting and finance associations, including such as the AICPA and IMA. And well before Enron and WorldCom gave rise to SOX in the first place, COSO was tasked with figuring out what causes fraudulent financial reporting. And the first chairman was James Treadway, who was an attorney and a former commissioner of the SEC. Therefore, the output of COSO would, of course, inherently be respected and supported by the finance and accounting professionals as well as others. Additionally, the SEC indicated that the original framework was an acceptable control framework to use, and they actually put that in writing. So therefore, by default, COSO is really the recognized gold standard in the U.S. as an internal control framework, and the vast majority of people follow that one.
So let's jump forward 10 years and talk a little bit about Sarbanes-Oxley Act and Section 404, which required U.S. public companies to establish, maintain, and determine whether their internal controls were effective on an annual basis, and to actually put in writing in their SEC filings that they had done so, putting people on the hook. The first standard that came out was, and guidance by the PCAOB, was actually Auditing Standard 2. That was not superseded, but was enhanced with Auditing Standard 5. And that was basically in what is called Paragraph 5. It gave rise to management and external auditors needing to look at things through the same lens, i.e. the same internal control framework. So as part of the implementation of SOX and the actual documentation of it, people were advised to look at and use an internal control framework, and COSO was the one that was suggested as the broadly accepted framework by the SEC and the PCAOB. And it was easy since it was already out there and people knew about it, and whether they had implemented it at that point or not, they understood what it meant and what it would take to implement it.
You know, and Dave, real quick on that point as well, I think a big reason that it was widely adopted back when Sarbanes-Oxley first rolled in as well is it's a very middle-of-the-road internal control framework, and by that I mean it's not specific to one industry or one type of business. So it's not specific to the financial industry or technology, etc. It's something that can be widely adopted really across any type of organization, which is why not only was it adopted early, but it continues to be the de facto internal control framework.
Yes, and that, if you go back to the original and yes, I was around at that time. The original framework, that was one of the goals, was to make it so it could be across all industries and all types of companies. So that's good to understand. So the next slide, we want to give a little bit of an overview here of the evolution of the GRC, or the Governance, Risk, and Compliance Landscape. So we start this with the bottoms-up audit approach, which was really incorporated in AS2. AS5 introduced more of a risk-based top-down audit approach, and that was the goal there, was to try and streamline the efforts that were done in implementing AS2, which seemed to be a bit onerous to every company. The AS5 allowed you to do a little bit more rationalization of your controls and to focus on the really high risk areas and not spend a lot of time on areas that weren't as risky or didn't have as much of an impact on your controls over financial reporting. So following that, additional guidance has continued to come out from the PCAOB as they get feedback, as they audit, I guess the word audit is a good word to use, audit the external auditors' work around controls. And AS12 and AS15 came out. There have been best practices. All of those things that have been introduced by the PCAOB have given a little more of a prescriptive nature to things, how you should look at controls, management review controls, what evidence you should be looking for, how you should be documenting your control execution. That, as we move forward into the future, people are looking at streamlining compliance through technology, improving the way management executes their MRCs, or management review controls, completeness and accuracy of reports and the data in those reports. These are all things that people are now focusing on, trying to improve and make more efficient and make more reliable. As we go forward into the future, I think we're going to continue to see optimization of the compliance framework, the focus on governance and risk management, so that we can really hone in, each company can hone in on what the key risks are and how they mitigate those. So let's stop for a minute and talk about the needs for some updating of COSO. As Dave said earlier, the other Dave, 20 years ago is a long time in our world today. What are some of the things that have happened over that time frame? Technology in particular has been evolving rapidly. 20 years ago, you bought software and put it on a machine in your back office in a cold room. Today, you can access it via the web in the cloud. So all the risks associated with technology have changed dramatically, and that has given rise to the need to evolve COSO. Corporate governance and the expectations around corporate governance. Boards have become much more active, especially the audit committees, since the Enron and WorldCom and other debacles. So they play a much bigger role. So there has to be more focus on that in the framework. Risk assessment and drilling down to what the true risks of the company that can impact financial reporting has become more and more complex as companies have gone global. They've introduced various platforms for delivery of their services and products. So all that evolution has led to the fact that COSO was a little outdated, frankly, and it needed to be updated, and there was a big effort to do that.
I might just add to that, another thing they did was they got feedback on the first COSO. So in the version that you have right now, you would find that there's a lot more examples that you can follow compared to the old COSO.
Okay, so let's jump into polling question number 2.
All right. Our second polling question for you is that the 2013 revision fundamentally changes the structure and operation of the internal control framework. Please select one of the options: A, true, B, false, or C, not true. As you're making your selections, I just want to share with you that the slides and recording of this webinar will be posted on our site, amlp.com, in 3 business days. Give you just a few more moments. All right, and with that, we'll close the poll.
All right, and let's take a look at the results here. So the question was whether or not it fundamentally changes how the internal control framework works, and the correct answer is B, false. Interesting to see the split. You know, to be honest, I expected to see a little more sort of even split. In reality, though, it does not fundamentally change how the internal control framework is designed and placed into operation. What it does is add more specificity. And with that, let's go ahead and dive in and start talking about what are some of these changes. So as we've talked about with some of the history behind COSO, there really was a recognized need to update the framework to really be relevant to what's happening in an industry and how risk and how controls are managed throughout an organization. The new framework was published in May of 2013. It's 3 separate volumes, a combined 500 pages. I encourage you all to read it word for word. And it really was an update to the original framework. So it was not a rip and replace, if you will. It was taking what had been put in place previously and working to identify where it was deficient and where updates needed to be made. You know, and the thing that's interesting is while it was introduced in May of 2013, the prior framework, and just as a point of reference, the 2 frameworks are commonly referred to both as COSO, but prefaced with the year. So, for example, 1992 COSO or COSO 2013, to really discern which framework you're currently aligning with. So while it was published in May of 2013, it is not considered in effect or superseding the prior framework until after December 15th, 2014, which is why it's a very important item for this year, especially for any companies leveraging COSO as their internal control framework for Sarbanes-Oxley. If you're a 12/31 year end, your 1992 framework will be considered invalid at that point, which is why this is a very, very important topic and very important to understand what those changes are. So with that, let's touch on what the hierarchy is real briefly here. At the highest level, at the outer ring, if you will, we have objectives, and we can step through each of those individually here in a moment. But as we get a little bit closer, we start to have principles, and there's more principles that we would drill into in each of these individual objectives. And last but not least, the points of focus are really the center of the target. And the great part about the points of focus are they really give you a very, very keen and prescriptive way to comply with the various objectives and the various principles. It gives you a lot of good thought to really determine how we designed our controls effectively in these specific areas to meet all of the principles and then working back out all of the objectives as well.
And I might point out, too, that the internal control components also dovetail with the objectives. They're interrelated because you have that COSO cube.
Exactly. And speaking of that, let's go ahead and look here at what is the COSO cube. This is a graphic that most individuals are most akin to when they think of COSO. You can see on the left, moving to the right, the 92 version moving to 2013. And what you'll notice is there's not a lot that's changed. Really what we've done is sort of flipped it on its head, which really makes sense because when we talked about having a bottoms-up approach under AS2 versus a top-down approach, the graphic was never reflective of really what it should be, which truly is top-down, starting at the highest level and working your way down. On the sort of face of the cube are the objectives, so control environment down to monitoring activities. And you really want to look across the various elements, operations, reporting, compliance, etc. And I think one of the key things that has sort of evolved from these changes to the COSO framework is making sure that we're looking at things beyond control activities. As I look at how COSO has been adopted across the organizations that we work with, and we're in and out of 100, 120 companies a year doing various types of internal controls for related work, both Sarbanes-Oxley, internal audit, etc. I see a hyper focus on control activities. Do we have the controls designed correctly? Are they operating effectively? And we do a little bit of work, and we see a little bit of a focus on operations and information communication and monitoring, but it very much is weighted very, very heavily towards control activities. And this movement towards principles, which we'll dovetail into momentarily, really helps you get a better handle on what are those control environment things that we need to be doing that commonly have been overlooked? What are the risk assessment activities beyond just my financial statement mapping we need to be doing? Information and communication, a very, very big thing. Are we engaging our employees in the appropriate way to communicate what are our standards, our practices, our procedures, and ultimately our results? And then last but not least, monitoring. Are we looking at the appropriate things to make sure we're driving results in the most effective way and achieving the results that we would expect?
Okay, with that, let's jump into the third polling question today. The 2013 revision modified which of the three objectives of an internal control framework? A, compliance, B, financial reporting, C, operations, D, no objectives were updated, or E, not sure. As you're making your selections, I just want to remind you to qualify for CE credits. You have to stay on the webinar for 50 minutes, as well as respond to 75% of all polling questions. We'll give you just a few moments to make your selections.
All right.
Okay, with that, we'll go ahead and close the poll.
And let's take a look at the results here. You know, and this is an interesting one because when I first started studying the new framework, this one threw me a little bit, and the correct answer is B, financial reporting. It was ultimately revised to just be reporting. And what the committee felt was that financial reporting really makes it far too narrow, just only on financial activities. And if we really should be looking at the various other activities, strategy, compliance, operations, etc., the reporting component really had to go beyond just reporting financial results and really had to be looking at operational results, compliance results, etc. So that's ultimately the one objective that was changed. And while it's a very minor change, it really is important in driving home this idea that it needs to be something beyond just financial reporting.
So, Jeremy, what you're saying here is that this was our trick question?
Exactly, exactly. I want to make sure we're keeping people on their toes. It's not an early webinar, so the caffeine should be in full effect by this point. Everybody should be cranking. All right, so drilling down one more level here, we talked about the objectives in the highest level, and I pointed out that I felt that the experience we have is that many of our clients tend to focus very exclusively or have a higher slant towards control activities. The principles that underlie those objectives really help in driving home the right level of detail and driving home the right control points you need to have in your environment. And this really is one of the most drastic changes that COSO 2013 has, is this movement from being purely objective-based to being principles-based. And the neat thing about this is these principles have been around and included in the 1992 framework, and really what happened was they were brought back to the forefront to really be looked at in more criticality as you look at the design and operation of your controls. So you can see that really at the end of the day, they drive home additional details, for example, around control environment, making sure you've got the commitment to integrity and values, establishing a structure, enforcing accountability. If you were to look at what are the control environment related controls, your entity level controls, your corporate governance controls, chances are you have a lot of those controls that speak to these, but they may not be mapped in the exact order that these would be included in, and I would venture to guess that one or two of these, or maybe a handful of these, are not hit at the same level of detail. So you could look at it and say, yes, we believe we've covered control environment, but have we really drilled deep enough? And one point that Dave Davis made earlier today was, as we're going through this continual evolution of GRC, of the governance risk compliance landscape, and control rationalization and optimization, optimization really is about not necessarily having to add more controls per se, but it's really about making sure you're going to the proper depth in your existing controls. And the principles that you see here are a great tool to help ensure that you are going to that right level of detail. In some cases, you may need to add more, so I'm not saying don't add controls. You may need to. But this is a great tool to make sure, have we gone deep enough in control, in corporate governance, in control activities, and risk assessment. Exceptional tool, and something that is going to be a very key piece of how you implement COSO 2013.
I might add, Jeremy, that in our experience, control environment has been viewed by most companies we've worked with as the senior management and the board and the audit committee's role. But when you read the principles and you look down on demonstrates commitment to competence and enforces accountability, that really goes down deeper into the organization, to the management organization, across the entire organization. And they need to be singing the same song as the senior management. I think that's something that this helps enforce that may not have been recognized in the past.
And that's a great point, Dave. I appreciate you pointing that out. So let's drill down a little bit more here to the points of focus.
Really, points of focus describe a characteristic of a principle, or really how the principle is in place. And if you think about it, points of focus are really the next level down, as Jeremy described earlier, the next level down from principles. There are actually 75 points of focus, and they're mapped to the 17 principles. So you've got this hierarchy where you've got your objectives, you've got components, then you have principles, then points of focus. The whole point of a point of focus is to aid you design your controls. It provides hints for what your control should have in its description. Now, I would point out that not every point of focus needs to exist for you to have effective controls. They're merely guiding principles. They're suggestions. Nevertheless, all 17 principles should exist and would need to be mapped in or documented in some fashion.
And that's a great point, Dave, making sure that people fully understand. Points of focus, it's not a one-for-one, to your point. They really are suggestions, and I think that's the best way to characterize points of focus, is they are suggestions to make sure that you're not omitting something that's critical.
Yeah, Dave, can you give an example of a principle and going down to the points of focus?
Yes, indeed. On our very next slide, we have an example, and that is the best way to point out how to explain this. Let me give you a good example. If we take the control environment, which is one of the 5 components of internal control, and then we look at the first principle, which is mapped to the control environment. Remember, a principle describes a component of your control environment. It says the organization demonstrates a commitment to integrity and ethical values. So then the COSO literature says your supporting points of focus are, and these are important characteristics of your principle, that it sets the tone at the top. It establishes a standards of conduct. And if you think about that, that's why that as a key control for many organizations, you see the annual signing of some kind of code of conduct. Not only is that a key control in most organizations, it's clearly a best practice. Other supporting points can be evaluates adherence to the standards, addresses deviations in a timely manner, such as that would be an HR issue. If somebody doesn't do something that's ethical, then what are the consequences? So really, points of focus are hints, what your control should address, and even more so, what you should test for, right? So with the new COSO, you should really review your current controls against the related points of focus to really ensure you've not missed anything.
Okay, that's a great example, Dave. Thank you.
And with that, let's shift gears and let's start talking in a little more detail about how some of these changes are really going to impact your organization.
Okay, so what's really different in the new COSO? Well, first of all, it really moves more towards a principles-based approach. As Jeremy pointed out earlier, we've got 17 principles. They were always implied in the old COSO, but in the new COSO, they're explicitly stated. And then furthermore, they provide supporting points of focus for the principles. So it's really moving everybody to a more formalized or standardized approach to internal control. It's really bringing a bit more structure. It's providing you more examples, which I think is a really useful thing. I think there weren't enough examples in the older COSO. It expands the old objectives of internal control category of financial reporting to reporting. So it also considers different business models. Entities use outsourced services now more than ever. And there's much greater globalization today, even for relatively small businesses.
Okay, I'll pick up some more of the changes, Dave. And I want to start with one of the points, an important point that has not changed, the core definition of internal control. And what that comes down to is internal control is a process affected by an entity's board of directors, management, and other personnel designed to provide reasonable assurance regarding the achievement of objectives relating to operations, reporting, and compliance. So that core definition has been around for a long time. The goal is that it permeates the entire organization, and the entire organization needs to be thinking about internal controls and blending it into the way they do business, the way they conduct themselves, the way they communicate, and the way they execute. So 3 categories of the objectives there: operations, reporting, which, as we mentioned earlier, is an expansion beyond the previous financial reporting, which was deemed to be a little bit of a narrower focus when they went through this revamp, and then compliance. And now also the 5 components that are under here in COSO have not changed. We still have control environment, risk assessment, control activities, information communication, and monitoring activities. But as Jeremy pointed out before, they turned the cube on its head because it's reflective of more of the top-down approach. You've got to start at the top. You've got to set an environment that is for senior management, the board, the audit committee, to set the tone at the top, as it is known, and communicate that down effectively so that people underneath the senior management of the organization understand the expectations and the focus and importance of controls in the everyday execution of their jobs. Because I got to tell you, having been in the corporate world for many years, it's pretty easy when you're up against deadlines and you're running 60, 70, 80 hours a week to forget that you have to be cognizant of executing the controls the way you're supposed to and not take shortcuts. So the core definition of internal controls stayed the same, and it's very important for people across the entire organization to fully understand what it means. And boards, and senior management need to be able to communicate that in their communications to their employees.
And Dave, let me highlight one thing here that we've got on the slide as well that I just want to kind of point out, because I see a significant shift, or I've really seen a significant shift over the last 6 to 12 months in how this is evaluated both by regulators as well as external audit firms. And that's the last bullet there, which is enhances governance concepts. And I really see that that's sort of the next evolution of internal control. Because if you look at any maturity model, whether you look at a COSO maturity model, a COBIT for IT, a CMM maturity model, at the end of the day, sort of the highest level in terms of optimization is really having what is true governance. It's proactive evaluation, proactive measures in place for your governance. And I think that's one thing that COSO did a great job in their revision, is really enforcing that it's not the day-to-day operation is important, but it's also this idea of corporate culture and what are the things that we're doing to proactively get in front of some of these things. And to your point, when you're cranking an 80-hour week, you make sure that you're hitting these things, and it's just part of what you do and does not look or feel like something other than part of a normal day-to-day activity. I think that's one thing that's really, really key, and I think that's a culture shift that I've seen the majority of our organizations we work with start to embrace, especially over the last 6 to 12 months.
Yeah, a good example of that I've seen at a company recently that we're working with is that they've added into their let's call it their checklist of things that need to be accomplished when they look at a new process or they implement a new product line, and they're embedding the whole concept of what are the controls and how are we going to document those along with the message, the building, the new assembly line, etc. So companies are starting to integrate that more and more. The other item, and I didn't make this point, but I meant to, is the increased relevance of technology. More and more companies are integrating their technology so that they have less manual steps. Unfortunately, that leaves less evidence of the knowledge of what's being done and how it's being done and how it's being double checked. So companies need to be very cognizant as they automate more and more how they are going to capture and document how that control or that automation is executing the control and ensuring completeness and accuracy of data and such like that. So that is a point that is becoming bigger and bigger focus of the external auditors and the regulators.
Yeah, and to that point, Dave, you know, I will say that the COSO does a great job of reflecting the importance of technology. And if you think about really what's happening in industry right now, it's very timely that they're focusing on this, because really two things have started to explode. And if you look at all the industry reports, are going to continue to explode. And it's the movement to the cloud and the movement away from traditional computing. And by that I mean mobility. You know, some analyst reports show that that PCs will be obsolete in as soon as 2 years. There's entire workforces that are moving to bring your own device or to tablets for their day-to-day workforce enablement. And because of that, to your point, it creates significant challenges from an internal control perspective, especially with, you know, as I mentioned, BYOD, or the consumerization of technology. Very difficult to have a control framework applied to a device that you don't physically own as a business. You know, what if you let your employees to bring their own tablets, cell phones, et cetera? What if you don't issue company issued devices and you interact with software that is not resident within your four walls, within your data centers, et cetera? Significant concerns, and those two shifts have already happened, and they're going to continue to evolve. And COSO does a great job by pointing you in that direction and really making sure that you're looking at it holistically and taking into account the fact that the reality is your business process and your technology now, for any organization that wants to grow and scale, they are now inextricably linked. You can't have one without the other.
Great point, Jeremy. Thank you. I think we'll now jump into polling question number 4.
Great. So the next polling question we have for you is, the 2013 revision modified the importance of judgment and made it less important due to providing a more detailed framework. A, true, B, false, or C, not true? We'll give you just a few more moments. All right, with that, we'll go ahead and close the poll.
All right, and let's look at the results here. As I flip to the wrong page here, the correct answer is B, false. And that's great. You know, I really think everybody is sort of, you know, seeing the writing on the wall, if you will, around this one, that judgment continues to be important, and documenting that judgment and being able to justify how you came to certain conclusions is of critical importance, and that really has not changed as part of the revised framework. So let's shift gears slightly here, and we've talked about the history, we've talked about some of the changes, so I'm sure you're all waiting with bated breath to say, that's great, Jeremy. How do we do this? What do we need to do? How do we get from point A to point B? How do we go from 92 to 2013? So let's go ahead and dive into the implementation roadmap and talk about how we are recommending you approach this.
Okay, so the first thing you need to keep in mind is that there is an additional disclosure requirement during this transition period up to and including December 15, 2014. So during that time frame, you could use either framework. You could adopt the new one, 2013, or you could continue using the 1992 version of COSO. But you needed to disclose which version you were using. So your SOX 404 report needs to say which COSO internal control framework you are referencing and using in your evaluation of your controls and the establishment of your controls. That's an important point. Not a big one, but an important one.
I might also add that as a practical matter, we've not seen very many companies adopt early COSO. I think part of the reason for that was they issued the new COSO in May of last year. By that point, people have already just started doing their testing. They've already set the budgets and so forth. It didn't leave you a lot of flexibility in terms of adopting the new COSO. And not only that, the first COSO was, for most organizations, we'll just say, a painful experience. So,
very good point, Dave. and let's face it, we're all a bunch of procrastinators.
All right. So here's what we're suggesting is sort of the roadmap. If any of you are on the phone, have worked with me, you know two things about me. I like pictures and I like very straightforward processes. So I think this really sums all of that up in one really, really distinct graphic. So first and foremost, you have to build awareness. And we're going to step you through what those details are. You want to assess and develop, determine where you're at, determine where your gaps exist, and determine how you're going to plug those gaps. From there, it's an execution phase. It's making sure you have the right people on the team and you're executing against the plan that you have developed based on your assessment. And last but not least, this is the piece that everybody will talk about and everybody will look at as part of their methodology, but it really is sort of the one that gets orphaned, is the monitor and improve. So often companies fail to come back and look at the monitoring and improvement process and look at what can be done different. I will say, though, I think based on some of the changes we're seeing in the GRC landscape, that this will become of greater importance. What we've really seen, especially coming out of 12/31/13, is that the sort of mentality of, hey, it's worked in prior years, it should work again this year, really has number one, has created some challenges for certain organizations. And at the end of the day, it's something that management is realizing can't really be the mindset moving year over year. So I think this is of critical importance. So we're going to highlight certain things that you should be focusing on in each of those areas.
Let's jump on awareness first. This is obviously the first step in compliance, and I have 3 words for you to remember. Communicate, communicate, communicate. That's it, just like location, location, location when you buy property. And what I really mean by that is that you have to develop a message and communicate it at different levels in the organization. You've got to know which audience you're addressing and how you should address those, because you should be explaining the changes in the control framework and the principles and the points of focus to the people that are taking orders or the people that are working on the factory floor in the receiving department, different than the people that are running the marketing department or the accounting department. So you need to know who are you speaking with, and I would bifurcate or segregate the communication and talk to people at different levels, at differently, and craft a message for each of them that resonates with them and what they do on a daily basis and how they do it, and make it so they can understand what might need to change or where their focus needs to be. So that's the best thing, is to drill down, use those points of focus as examples for people, because it's a lot better than explaining a concept or a principle to them, is to give them, here's the points of focus. These things are important, and these things are tangible that you can understand based on the role you have in the organization. And let's face it, making sure that the internal controls in an organization are effectively executed goes from the bottom of the organization all the way to the top.
And great, you make a great point there, Dave, with the points of focus. They really make it tangible, because one of the things that I see, questions I get from my clients, and the trap that we have to sort of catch ourselves from getting into as service providers in this space is we speak audit. You know, we're in details of internal controls and audit requirements and guidance day in, day out, so we can quickly read it and understand it. But that's not always the case with with clients we work with, especially individuals who don't work in maybe an accounting or finance role, but do have an impact on the control environment. So these points of focus are a great tool to help make it very, very tangible, so they kind of have that aha moment to say, oh, okay, I get it. I may not understand what control environment is, but I understand how the code of conduct and whistleblower, et cetera, impacts me and what my responsibility is in that space. It's a great point.
Yeah, I agree completely.
Excellent. So from there, you raise awareness, and I will say just in kind of closing the loop on that one, raising awareness is not a one-time event. It is something that is ongoing. It's something that needs to be done periodically throughout the year and needs to evolve with the organization. So not just the right messaging to the right audience, but the right time as well. And with that, it moves you into conducting your assessment. And this is really about as straightforward as it sounds. You want to go through and start evaluating your current environment, your current practices. How do you align with the 1992 framework? Have you gone to the extent of really looking at how your controls hit each of those various components? Do you have those in your narratives? Are they called out in your RCMs? Are they documented somewhere? So understanding where those gaps exist. And I will say you want to evaluate the components of what I'll call your internal control system. And it's not system in the context of an IT system, system in context of the various components, your people, your process, your technology. Control activity is, as I mentioned, really been the key focus over the years, and it is something that really transcends business process. You're going to look at it in IT and business processes, et cetera. But you really need to make sure, do we have the appropriate steps in place to address gaps with our people, whether it be training, awareness, et cetera? Do we have the right technology in place to facilitate, whether it be the evaluation and gathering of evidence, the monitoring, the information communication? The output of that evaluation is really going to be a gaps list. It's going to be your roadmap, if you will, to plug those gaps. The phrase that I've heard quite a bit and I really like is, if you don't know where you're going, any road will get you there. So with this, you really want to define what is that road you're going to take to get there. Those gaps are going to help you define what the next steps are going to be and what those action items are. Wherever possible, leverage standard templates. You want to adopt the framework and the templates that can be consistent throughout your organization, and that's both cycle by cycle as well as business unit by business unit. And the key piece there is get the right stakeholders to the table to discuss those and make sure that you're in agreement across the board what those are going to be, because that's going to help ensure compliance because you've got a standard approach that doesn't deviate unless there's sort of a valid reason for that, but really has very few deviations throughout your organization. And last but not least, you want to take and synthesize all of this information into a summary of results and develop your transition plan. And that's really what's going to be your roadmap. It's going to be your project plan that's going to drive you from 92 to 2013.
Okay, so let's talk a minute about executing the transition plan. And as we approach the noon hour and lunchtime, I'm getting hungry looking at those apples. Anyway, first and foremost, and very key to success of a transition plan, is to identify someone that is capable and give them the responsibility and the authority to own this initiative. They need to be empowered. They need to be allowed to drive the initiative to completion, and people in the organization need to understand that that is their job and their goal, and that everyone is responsible for reaching that goal. So this is the most key thing on this slide, in my opinion. I've seen a lot of transition plans in my career, and I've seen them fail sometimes because you didn't have an advocate that got up every morning living and breathing the execution and the success of it. So keep that in mind. Next, I would say you got to, we say here, identify the gaps. Well, that should have been done in the assessment phase. You got to fix them. Jump on them, figure out what you're going to implement, what you're going to change, how you're going to refine things, because a lot of this will be refinement as opposed to change of your existing controls, and the documentation and the execution of those. So refinement is a key word. And then test them. Get in there as soon as they get implemented and have a little bit of time to operate. Get in there and test them for effectiveness so that you can see if your system is working, if the changes have been put in place and are actually being executed properly. You don't want to wait till the end of the year and say, oh, yeah, I think I put all that stuff in place and it should be working. You have to be proactive and get in front of the curve on that and ensure. Because let's face it, things that are monitored and reported upon generally are done better than things that are not monitored and reported upon. Okay?
I might add one other thing, is that I completely agree with everything, but when you have a project manager, one thing I've observed, it goes a little better if that project manager is assigned a champion who's a VP or a C-level, so that they have broad-based support and visibility.
Absolutely, Dave. That is a great point. So this next slide is an eye chart. I dare you all to try and read it. But what we're trying to show you here is that there can be a way to implement the principles in a standard format. So you list the principles across the top, and this is an excerpt from a control matrix. You can then evaluate for the existing controls, are they hitting which one of these principles are they actually supporting? So you can get through and find, and in this example, for instance, number 11, so far there's no check marks in that box. Hopefully further down the control matrix there are. But this will give you an example of where you might have gaps because you have controls existing that aren't hitting some of the principles. And if they're not hitting the principles, they're clearly not going to be hitting the points of focus.
Yep, exactly. And so with that, moving to continuous improvement, we talked about how to raise awareness, where the gaps are, et cetera. And really to Dave's point, as soon as those controls get in place and you let them operate for a short period of time, get in and evaluate those. And there's various pieces that you want to do in terms of continuous improvement. You want to make sure that you're driving board awareness and you're making sure that you are keeping them informed and making sure you're meeting their expectations. At this point, most boards we've been interacting with have simply asked kind of what is the transition plan, but have not really dug into the details yet. I expect that to change here now that most of our organizations we work with and most companies have come out of the sort of the fog, if you will, of getting done with their year-end activities and are starting to look to more detailed plans for 2013. You want to evaluate the effectiveness, and that's really where testing is really going to be helpful. It's going to help you determine has the components we put in place, are they in fact operating as we expect? And do we have areas of inefficiency? Do we have areas where we have either we've got unmitigated risk or maybe under-mitigated risk that we didn't foresee? Testing is going to help you evaluate all of those things. And then you want to make sure that you've got the review process that is put in place to identify not only what is not operating, but where are the updates and who's going to own them, and making sure you have that corrective action function within the organization.
So how do you measure your compliance success? Well, one thing that's nice is the new COSO makes a better effort to make that clear how you would do that. What they say is all 5 components of internal control and the 17 principles need to be present and functioning. Present meaning they actually do exist, and functioning meaning they are effective, they're operating on a continuous basis. The other thing that needs to be in place is that all 5 components are operating in an integrated manner. They're operating together. And really, if your controls are effective, then I would say by default, you're in compliance, and that these things are really happening. Things are present, they're functioning, they're operating in an integrated manner if your controls are effective. The whole point is that your effective controls reduce to an acceptable level the risk of not achieving your objectives of one or more of the 3 objectives of internal control. So basically, internal control is effective when senior management and the board of directors have reasonable assurance of those internal control objectives being achieved. So your operations allow negative events to be mitigated to an acceptable level, or at least you understand why they cannot be. Your reporting follows some specific standards such as GAAP, and you're in compliance with the applicable laws and rules and regulations.
Okay. So if we go to the next slide, let's just talk and summarize, I should say, the key steps for success with the new COSO. Our recommendation is to map the existing controls in your environment to the 17 principles and identify gaps, look at the points of focus that support those principles, and then use those to design new controls or adjust, revamp existing controls so that they cover those missing points of focus.
And Dave, let me jump in there, and
Sure.
Very relevant, one of the attendees on the webinar today made a great comment here that really speaks to this as well, that ties right into this. And the individual made the comment that really need to make sure that you're looking at how controls integrate well with the operation of your business, and not putting controls into place that become sort of obstructive, if you will, and get in the way, because at the end of the day, this person makes a great point. Those are going to be bypassed, and I'll say, Dave, working with you for 10 years, we've seen that happen with organizations. And that is very much akin to the approach that we would take and we would recommend, is evaluate what your current processes look like and see what you can call out as controls. And how do you make those controls be just part of what you do and not feel obstructive or onerous, because this person makes a great point, and again, we wholeheartedly agree with that, is if you put things in the way and they feel like barriers, ultimately people are going to try to figure out how to get around them, and it really defeats the purpose of putting those controls in place. And looking at this mapping exercise and determining, do we have the right controls, are they designed effectively, are we hitting all the right points, it's a perfect mindset to have as you go into that, which is, how do we make this just part of what you do?
Yeah, that's a great point. We don't want any controls that can be perceived as sales prevention devices. That doesn't go over well. So moving on to the next point, we ensure that the control assessment demonstrates that the principles are there. So again, that goes back to mapping them. They're both present and functioning, so that talks to our testing of those controls later on down the road. And that the 5 components are integrated. As Jeremy said, they can't be obstructive to the business. They need to be flexible, and they need to take into account and affect how the business runs and where it's going, so that it won't hold the business back, but it mitigates the risk to an acceptable level of errors and misstatements. And use those 75 points of focus to make sure that your control design is appropriate, and use those also when you're designing your tests of your controls, so that you can make sure you're hitting on those points and seeing that they're being addressed. And then the last one, disclose the COSO framework you're using.
Don't forget to do that. You might get yourself in trouble.
All right, with that, let's jump into polling question number 5. Have you started the process of implementing COSO 2013? A, yes. B, no. C, not sure. And as you're making your selections, remember to pull in any questions you have for our presenters. We'll be happy to answer them during the presentation. All right. With that, let's go ahead and
take a look at the results here. All right, and as the screen refreshes here, 67% have not. I will say that's not surprising. We've hit on this several times during the discussion today, that very few organizations that we're seeing have been early adopters. Some have started to sort of point the ship in the right direction, but very few have gone full boat and have started implementing. So I will say, you guys are the folks that are in that 67% are very consistent with what we've been seeing. But I will say, you know what, we're rapidly approaching the end of Q1 here. If you guys have not started to think about what that plan is, please feel free to reach out. We're happy to have further discussions with you individually. A lot of runway in front of you right now, but please be sure it doesn't become a fire drill at the end of the year.
And let's congratulate the 24% that said they have started. Congratulations to you.
Absolutely. And in conclusion, we're going to wrap up here. The things we've covered, we've talked about the background. What are the changes to the landscape that's driving the changes to the framework? What are those changes? How do we comply? Hopefully you guys are walking away with some good details that you can take back to your organization and implement. You will have our contact information at the end of this. Please feel free to use this as a resource as you guys begin to implement and have questions. And with that, I think we have time for maybe one brief question. All right. And one question that came up here, do I really have to comply, and what happens if I don't? And that's an interesting one. I will say, yes, you do have to comply. What happens if you don't? Really what it comes down to is one of the key things that it could have is an adverse impact on your 404 opinion as a public company. You have the responsibility to adopt an internal control framework. You have to disclose which one it is, et cetera. And if you are not properly aligning with that, ultimately it's going to impact your 404 opinion, I think really is the biggest and most obvious issue.
All right, with that, on the screen you will see our presenters' contact information. Please feel free to reach out to them should you have any further questions. Thank you for participating in our webinar this morning. As a reminder, all participants will receive instructions to access their certificate of completion if they meet CPE requirements, as well as a copy of materials and a recording of the webinar within 3 business days. As you exit our webinar, please take a minute to fill out our brief evaluation. Your feedback is very important to us.
I might point out there's a typo on Dave Davis's email, so call me.
Oh, okay.
Whoops, missed that.
Thanks everyone for joining.